When I first came to this country, I went out and spent, I don't know, $4,000 or $5,000 at the time in cash buying a car. And it wasn't because I couldn't get credit, it's because I had the cash. And if somebody had just told me, somebody had hit me across the head and said, get a secured loan for this, it will help you build credit. That would have helped me so much in the forthcoming years when it came time to find a mortgage lender.
You're listening to IBKR's Census Security. Find more conversations at ibkrpodcast.com. Please remember, any trading discussions are for information purposes only and are not intended to portray recommendations. Please listen to further disclosures at the end of today's episode. Now, welcome to our show.
So Mary, about 23 years ago, I came to the United States. And when I came over, I was cash rich. I was just going to start renting. I had cash to buy a car. And I really hadn't, back in England, been concerned by credit ratings. I didn't really know what they were. I had a mortgage and this and that. I never really needed access to money. When I came over here, boy, if I look back over 23 years, I wish I'd had somebody tell me and educate me about credit history, credit scores, and how to actually just go about making a purchase. So what's the big deal? What can you get with good credit? Well, you can improve your chances of renting an apartment, you can receive better insurance or cell service rates, and you can qualify for better credit card deals, and in some instances it can help get you a job, but in general, you're certainly going to pay lower interest rates with a good credit rating. So Mary, why don't you tell us some background as to how credit history began?
Well, Andrew, sure. I'd like to enlighten you on this a little bit. Credit history in the United States has its roots actually in the early 20th century. Department stores, they started to issue credit to customers who couldn't afford to pay for their purchases up front.
I know who you're going to mention. You're going to mention Sears Roebuck. That was one of the earliest
exactly.
retailers, isn't it?
You're right. In 1900s, Sears began offering installment plans and for refrigerators and so forth. And this allowed customers to make small payments over time, not one lump sum. And Sears then started to keep the records, which was really important, so they could look up the payment history to determine if this person was credit worthy. So by the early 1920s, Sears had become one of the biggest retailers in the country. So by doing all of this, Sears became one of the first companies to develop a comprehensive system for tracking credit history and also assessing credit risk. Other stores such as Montgomery Ward and JCPenney also followed suit and began offering credit to their customers as well.
I know that there are 3 major credit reporting bureaus in the United States now. There's Equifax, Experian, and TransUnion. But as of May 2023, TransUnion's market cap was approximately $25.7 billion. Tell us a little bit about the background. How did this all happen? Where did TransUnion come from, for example?
Well, I'm glad you asked. TransUnion was actually founded in 1968 as a holding company, are you ready for this, for Union Tank Car Company. However, in the 1980s, TransUnion shifted its focus to credit reporting and data management services. So the company saw an opportunity to provide lenders with a comprehensive and reliable information about consumers' credit worthiness with the help of computers, obviously, that held all that data. So with all that data, they began to compile it from different resources and sources, such as banks, credit card companies, and other lenders, and using this information to create credit reports for individual consumers. As the demand for credit reports grew, TransUnion and the other credit reporting agencies that you mentioned became more sophisticated in their data collection. And they also started automating. They began to automate their systems, which enabled them, with the big computers and so forth, to process large volumes of data. And in turn, this helped lenders assess the credit risk of their customers and make better lending decisions. And as you mentioned, they're huge, $25.7 billion USD.
So now we hear, related to this topic, a FICO score. What exactly is a FICO score? What's the history?
So FICO stands for the Fair Isaac Corporation. Who knew, right? FICO was a pioneer in developing a method of calculating credit scores based on information collected by these credit reporting agencies.
So what sort of a range do they measure for somebody's creditworthiness?
So right now, the credit scores, or the FICO scores, range from 300 to 850. And the higher your credit score, the much better.
And what's the typical range?
Typical is usually around 670 to 739. This is considered good.
Many mortgage lenders look at anybody over 700.
That's correct.
And if you're over 800,
that's heaven. You're in a positive area for credit worthiness.
in terms of a FICO score, what does a high reading mean to the agency?
What that really means is that you're dependable, you have income coming in, you pay your bills on time, just common sense things, right? Really, a high score means that you're seen as less of a risk. And so you may qualify for better interest rates and loan terms. And it also may affect your ability to get approved for car loans, credit cards, a lease on an apartment, a mortgage, and even a job, because a job will also run your credit report.
Now, here's a few things about the FICO score that I wish I'd known 23 years ago. What makes up a FICO score? More than a third of it is made up by the payment history.
That's right. It measures the consistency with which you have met your credit obligations, with late or missed payments having a negative impact on your score.
Okay, and then about another third, maybe 30%, consists of how much you have outstanding.
Right. It considers your outstanding balances and how much of your available credit you are utilizing. The lower utilization rate is generally viewed more favorably by lenders.
And the length of your credit history, that makes up another 15%. Why is that important?
This reflects the length of time you have been actively using credit, as a longer credit history can generally indicate a greater stability and financial responsibility.
And how about new credit? That makes up the smallest component of the FICO score. That makes up just 10%. Why is new credit important?
So this metric looks at the number of recently opened credit accounts on your credit report, as applying for too much credit in a short period may suggest a higher level of financial risk.
Right. It's one of those funny things. If you need money and you go looking for it, you're perceived to be a higher risk. If you don't need money because you're cash rich, everybody wants to lend to you.
Exactly.
And then the credit mix, that's another 10%, Mary?
Right. This aspect assesses the diversity of the credit accounts on your credit report. So this would include credit cards, loans, mortgages, as having a mix of different types of accounts, which can be viewed very positively by lenders as well.
What advice can we give to the younger generation? Our kids are just going into colleges. What are some ways to help them build credit if they're just starting out?
One of the biggest ways is to have a steady income, in bold, I would say, because the lenders will verify this. And really, the best way to start is just small things. Be responsible with your credit usage. You might consider getting a secured credit card. What that is it requires a deposit. So let's say you put in $500. This can help you establish a credit history. You can become an authorized user on someone else's credit card. For instance, your parents, right? As long as they're responsible for their credit usage. And another option is just take out a small personal loan from a bank or credit union and make timely payments. Just be aware of your budget. Do not overspend, pay your bills on time, and if possible, in full each month.
When I first came to this country, I went out and spent, I don't know, $4,000 or $5,000 at the time in cash buying a car. And it wasn't because I couldn't get credit, it's because I had the cash. And if somebody had just told me, somebody had hit me across the head and said, get a secured loan for this, it will help you build credit. That would have helped me so much in the forthcoming years when it came time to find a mortgage lender.
Agree. I mean, the thing is, back then, we didn't have Google.
Right.
We didn't have the internet to
We
tell
had
us.
Dogpile.
That's right. We had nothing. And so we just didn't know.
We had Netscape.
We had Netscape. That's right. Mosaic. Some of you may not even know what that is, but that's okay.
Some of you may never know because we'll probably edit
right.
this bit out.
That's right. I won't even get into the part where my parents, one of them was in the Depression. And so in my family, credit was like a bad thing.
Of course.
Yeah.
Oh, absolutely. That generation did not like debt.
No,
You
they
couldn't
did
afford
not.
it, you didn't buy it.
That's right. And so...
And if you couldn't afford it, you didn't eat.
Yeah. You didn't ever want to live too large.
So
for
take
your
that
britches.
down, millennials. All right. So in terms of financial planning and trying to build and establish a credit history, how much credit should you use and how much is too much?
Well, generally, from what I've been able to research, 30% or less.
30%.
Yeah. You don't want to use too much of your credit because it can hurt your credit score, which is hard to believe that they give you a certain amount. You can't use that certain amount. You're only supposed to really use 30% or less.
Right. Explain some of the common mistakes people make when building credit, how to avoid those pitfalls.
Okay. One common mistake is applying for too much credit at once.
Yep. Need a loan, go online.
Exactly. You look desperate for
Yep.
credit, and this hurts your score. Another mistake is just missing payments.
Set up a payment plan.
Yep, do it. You can set that up automatically with your banking account, or you pay late, which can have a major negative impact on your credit score. So you want to keep track of that. Use a calendar if you can, and only apply for credit when you really need it. And make sure you're able to make your payments on time. So once again, it's knowing how much money is coming in and how much money is going out. We can also use the tools of the modern age like automatic payments and so forth.
How long does it typically take to build a good credit score? And when would you tell a youngster to start worrying about credit?
Well, in general, a good credit score takes a bit of time, usually at least a few months to a year or more. So it's important that you want to build credit, if possible, as early as you can.
Yep.
Okay? But you shouldn't worry too much about it.
Don't obsess.
Don't obsess. Don't keep looking for your scores. Just focus on using credit responsibly. Make your payments, and your score should gradually improve with time. And here's a tip. You can check your credit score for free online or through your bank, credit card company, or other credit apps. And checking your score, once again, too often may hurt it. So you'll just want to read the fine print about access limits.
So how often should you check, Mary, your credit report, and where can you get a free report?
So it's recommended that you check your credit report at least once a year, and more often if you're actively trying to build your credit. So you can get your free credit report from each of the 3 major credit bureaus.
That's Equifax, Experian, and TransUnion.
Correct. And once a year by going to annualcreditreport.com. And by the way, this is the only site that is authorized by the federal government, the U.S. federal government, to provide free credit reports. And you can also get a free credit report from some credit card companies or other lenders, but these may not be as comprehensive as the reports you get from credit bureaus. Now, there's also an app called Credit Karma, and there might be others as well, which offers a variety of services, including free credit reports and credit scores from TransUnion and Equifax. This company was acquired by Intuit, the parent company of TurboTax and QuickBooks, in 2020. There's also a profusion of other apps such as Credit Sesame, Wallet Hub, NerdWallet, Mint, and more. And, maybe we'll focus on these in another podcast when we're exploring tools.
So does overchecking your credit score make it go down?
Well, this is one of the more common misconceptions, and the answer is yes and no. And the difference lies between the soft inquiries and the hard inquiries.
So what's a soft inquiry?
Soft inquiries can include employment applications, pre-approved credit card, loan offers, or when you check your own credit report. So it's like you're poking at it, right? Or somebody else's. Whereas hard inquiries are when a lender requests your credit report information in connection with a credit application. So let's say you're applying for a mortgage or you're getting a car loan, another credit card, a store credit card. And hard inquiries can have a small negative impact on your credit score because statistics have shown that people applying for new credit tend to be riskier than those who do not.
If you want money, you're a riskier person.
That's right. And don't use your cash. Okay. And the impact of hard inquiries, now they begin to fade after the first 12 months, and they will be dropped from your credit report after 24 months. But there's no real exact timing on this, so just keep that in mind.
So when you're trying to borrow money, you're looking for money, I guess they call that rate shopping. Does that harm your credit score?
It's common to take time to search for your best interest rate before taking out a new loan. And it's likely that several lenders will check your score around that same time. So rate shopping shows financial responsibility, not higher risk of financial distress. And therefore, credit scoring models consider multiple inquiries within a short period of time as just one inquiry.
And a short period of time might be 14 days in this case if you're looking for a car.
Yes,
shopping for a
that's
mortgage.
right. That's correct.
And what about if you don't pay for a loan? That harms your credit rating. But what are some of the penalties for non-payment on a loan?
Yeah, this can get a little scary. So for federal student loans, for example, the IRS can garnish wages, which means they can actually extract money from your paycheck.
You just go straight to your employer and they take it.
That's right.
There's
Also,
nothing you can do
and there's
about it.
nothing you can do.
Yeah.
Also, credit lines can't be extended if your debt burden reaches certain thresholds. And the APR
That's the interest rate.
on your monthly credit card payments can soar if you're late or miss a payment. And here's one to keep in mind. If you don't make a payment on your car loan, your car can get repossessed.
Yeah. Suddenly walk out to the parking lot one day and it ain't there no more.
That's right.
A lot of what you said earlier about the credit reporting agencies and the history of them, this is nowadays, it's a very well automated process. So errors happen. What happens if you stumble across an error or you suspect there's an error on your credit report? What do you do?
Yeah, now this is really important, and you may want to replay this. So if you find an error on your credit report, you should dispute it with the credit bureau.
How do you do that?
So what you can do, and this is important, contact the credit bureau in writing, either through a letter or through their website, and provide documentation to support your claim. Then the credit bureau will investigate the dispute, and if they find the information is inaccurate, they will remove it from your report. So let's say you checked your credit report and noticed a charge for $200 from a store you've never shopped at. You decide to dispute it with the credit bureau. So you write a letter to the bureau explaining the situation and provide any evidence you have. Now, this could be receipts or bank statements that show you were somewhere else at the time of the purchase. Use a highlighter and circle the discrepancy. State clearly that you want the information corrected or removed. And then send that letter in certified mail and keep the receipt. Then save this information, put it away in a safe place. Make sure you have your own copy. The credit bureau must investigate the dispute. If they determine that the charge was indeed fraudulent, they'll remove it from your report, which will improve your credit score. And it's all in those details. Another potential error can include closed accounts that are reported as open, accounts belonging to another person with the same or similar name as you, and accounts with incorrect current balance or credit limit, or incorrect accounts resulting from identity theft, which I know you have a big tip for everybody.
Yeah. Whenever you apply for credit, one of the things that's absolutely necessary is to input your social security number. My advice, don't give out your social security number to anybody. Don't let anybody else see it. What happens is somebody gets hold of your social security number and you become a victim of identity theft. And as you were just saying, Mary, some rogue activity on your credit report could be as a result of somebody getting hold of personal information that you really wouldn't want shared. Criminals attempt to use your identity to apply for loans, and the one thing that they really need is that social security number. Just don't give it out. If you see inquiries on your credit report that you don't recognize, it can indicate a larger problem than a simple reporting error. Could easily be a sign of fraud or identity theft.
Yes, that is very important and highly revealing.
So there you have it. There are some really good tips on establishing credit, what to look for, what to do. And folks, do refer to the show notes on the website. We'll try and include as many of those links as we can to help you get started in establishing information about credit.
Thanks for listening to IBKR's Sense of Security. As always, there's more content at ibkrpodcast.com. And if you're interested in learning more about interactive brokers, visit ibkr.com. We offer more trading education content such as webinars, market commentary, market-related courses, and quant-related articles at ibkrcampus.com. The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice.